We know that carbon taxes are an essential element of climate policy, but we think that they also could form a good tax policy, that they could improve tax policy. Why is that so? Well, tax policy is about raising government revenue, and we want to raise government revenue in a way that doesn't discourage economic activity too much. If you set very high labor taxes, you reduce labor supply. If you set very high capital taxes, you reduce investments. So that could put a brake on the economic activity. If you put a tax on carbon emissions, you reduce carbon emissions, and that's actually something that we want to do. So in that sense, if you can tax carbon emissions more, that gives you the option to improve tax policy, because, for example, you could reduce taxes on labor and taxes on capital, or you could provide compensation to some households, or you could increase climate finance, or cut debt, or you could do all kinds of things that make good economic sense. So shifting the tax burden away from capital and labor to emissions actually helps you to improve tax policy if you make good use of the revenues. How should we communicate that to people? Well, we should first engage with all the stakeholders. Carbon taxes affect everyone, so we should be talking to everyone to get them on board. Second, we should be talking about policy packages, not just about carbon tax rates and carbon tax bases, but also about what we do with the revenue. Third, we should be talking about co-benefits. Reducing air pollution, for example, could be very important. Fourth, ultimately, we should be convincing people that fighting climate change is not a luxury, but something that we absolutely must do, and carbon prices are part of that picture.